Okay, folks, welcome back. This is our midweek review for March 18th, 2020. This is our dollar index. This is our daily chart. And you can see the reaction we had off of our BISI here and consequent encroachment, as noted in previous recordings. Just want to widen this up a little bit, give it some more character. We almost made it to 102 today. Beautiful, beautiful expansion today. The high came in at 101.74, just 26 points away from reaching that 102 threshold. That is my objective going into the close of this week. I'm looking for 102 to get tagged. If we zoom in a little bit, let's go out to a weekly chart and crunch this up a little bit here. This 104 level is what I have my intermediate term target set to, and then run above that if we can get to it. It certainly looks like it's trying to make an attempt to get up there, and I want to talk a little bit about gold as an overlap with this dollar commentary. I'm not going to pull up any gold charts because I don't think it's something you should be a part of right now. But if things do get more interesting and more clear, then I'll ring in gold. But for right now, I want you to focus just primarily on the dollar index and the majors in conjunction with the S&P 500. So we'll be looking at the relationship of this dollar rally from the 9th of March until today. And it's been pretty extrapolated. We had buy side liquidity represented by this high here. It ran through that rather aggressively. Now, as I mentioned in the weekend review, I mentioned that I've been counting down days, if you will. And I believe that the 18th, and I might be off by one day, or the 19th, but I'm pretty much satisfied with what we saw today. We got fresh lows in the stock market, extremely high run on the dollar index. Oil tanked. So are we in the United States, this is primarily what I'm referring to, are we in that period that we'll see explosion in the number of cases in the U.S.? And should that come to fruition, will that speed up the sense of panic in not only the markets, but in the world? The idea that this has stopped or has met its height is being, perpetuated by the talking heads. I've been watching it for the last 3 days. Every day, these folks get on TV and they're saying, okay, yeah, it looks like it's finally made a low. Oh, yeah, it looks like it's finally done. And it doesn't. It just goes lower. You might get one day up, and then they sell into that rally, and it goes lower for the stock market. So in all of this uncertainty, with oil crashing, dollar rallying, we're actually in a symmetrical market. Even though all of the chaos is going on, the things that you would expect to see happening is in fact happening. Dollars rallying, commodities and foreign currency should be declining. The safe haven aspect of the dollar is being witnessed here. So when we are contemplating whether or not gold should go up or down, if dollar's rallying, showing this much strength, it's going to be difficult for gold to rally. So therefore, the safe haven is the greenback. That's where money's going. Now, if we look at the economic front from this standpoint of Saudi Arabia and Russia, the narrative they're trying to put out there is Saudi Arabia and Russia are bickering and are fighting, and they have a price war going on. And Saudi Arabia floods the market with oil, it slashes the price, it drives it down. So therefore, those individuals that are in the U.S. that are fracking, trying to get oil and break into that industry, it's not profitable for them at these price levels in oil. So as a countermeasure, I believe that the Federal Reserve is pricing dollar higher. So if they want to sink oil, the Fed will rush to rally the dollar index. So it's that idea behind the curtain, if you will. Okay, so if we see a continuation of the dollar rallying, we'll probably see oil trade as low as $12, maybe even $10 a barrel. Will it stay there very long? I don't know that, and personally I don't care. But it's very important to try to avoid picking tops and bottoms in this environment, because the constant narrative is going to be, well, it looks like we got capitulation now. Well, it looks like we got all the the fear into the marketplace. We haven't even really begun in the U.S. So if equities are being sold to the public as, hey, look, the worst is behind us, start averaging in. This isn't the time to buy stocks. Put in, start layering in, start doing all that. That to me is stupid, okay? Because you can't use the financial crisis from 2008, 2009 and that quote-unquote buying opportunity then, because frankly, I believe the Fed was buying stocks then, and that's what drove the market up. And granted, there was other people that saw that going up and they bought into it as well, but since then, this has been an artificial rally, and it is to me. Okay, that's my opinion. I've had that mentality and had that opinion since then. Okay, so I believe they did that to prevent our markets from crashing. But now at this point, we have something. If you want to believe it's the virus on its own accord creating all of this, which I'm sure has a lot to do with people's fear, because let's face it, it's something you can't see, you can't taste it, you don't know when it's coming, you don't know when you got it until it's too late. So it's a germaphobe's nightmare. And I'm raising my hand, okay, because I don't like the idea of not knowing, who around me may or may not have it. So I would be lying to you if I didn't say I was genuinely concerned. Okay, I trust that I'll be fine. I hope that I'll be counted worthy to escape anything that requires me enduring this plague. And I'm doing everything I can to keep me and my family safe, and I'd suggest you do the same thing. But let's just assume for a moment that this is just something, okay? And I'm not trying to diminish people that are suffering with it, okay? Don't think that's what I'm saying here, because I already admitted that that's what I felt was going on in China behind its borders. I felt that they did that to scare their own people because they started to protest. And it went outside their country's borders, and it's apparently taken people's lives. And the message today was the younger generation in the U.S. are thinking, because they've been told this, it's an old person's disease. Okay, only the elderly are getting it because they're more susceptible. Well, they're more susceptible to anything. Okay, they're more likely to fall and hurt themselves. They're more likely to fall victim to the flu or the cold, pneumonia, all those things, okay, in the world that younger people tend to weather better. The older folks don't have the immune system to support all that. So without boring you, I have moved away from the idea that it was just a control mechanism for China, and now that it really is something that we have to contend with. My concern is this: you can't have everyone shelter in place everywhere, all around the world, okay, and expect this to go away. That's why when you hear them say, we're doing this to help slow the virus. Notice the word stop, halt, conquer, okay? Those words and terms are escaping their reach when they're talking about it. And that's what my concern has been, because if this indeed is one of those 100-year plagues that come around and wipe out millions of people, we have something really to be concerned about. Because if it just takes one patient zero, okay, one person walking around that didn't do the quarantine, that didn't do the washing of the hands, that doesn't cover their cough, or Lord forbid is one that's licking shopping cart handles and bus posts, or putting their saliva on automobile handles and doorknobs, because these are people out there doing that right now. All of this will kick off again. So it's concerning. It's alarming to me, because while it's a great idea, and I suggested this in my Twitter, that they should just simply grind everything to a halt and sit still and let it die its normal death. If it has no host, those that are infected with it deal with it, and no new infections should take place. But I don't think it beats it. I don't think it, removes it. I believe we'll have another bout with it in the coming fall months. And if you study the Spanish flu, it made its way around the earth about 3 times. So, if the Spanish flu is any indication of what we're contending with, this is a long game. It's not a couple innings and we're done. So it's important to understand that we are just now beginning this whole process, and the economic fallout will be really seen later on. Right now, it's just the fear and panic. But what happens if these companies can't reopen? I'm an entrepreneur. I own businesses. So if I can't weather the financial storm, that business or businesses can't continue. That's a normal function of business. If there's no revenue, then you simply can't operate anymore. And that business either has to dissolve or you pour money into it. And there's a lot of companies out there in the world, not just in the United States, that have no safety net. They can't just keep pouring money in. They can't take care of their own livelihood, because many business owners are working paycheck to paycheck as well. Now, the economic support that's being offered cannot save every business. So there's going to be a lot of casualties in the form of bankruptcies and businesses that are going to fold. And this is going to go on for a while, because credit's going to be squeezed. A lot of people are going to look at the likelihood of whatever factors are involved with them taking on business loans or providing lines of credit. All those types of things are going to be impacted by this, because let's be blunt. If you are a bank and you're in the business of lending money, are you in a hurry right now to lend a lot of money right now? No way. It's uncertain times. These are really uncertain times. So it goes without saying that the banks that are in business now, they're going to be a little less willing to do new startups, support, new business ventures, regardless of your previous credit. I have a very high credit score. I don't believe that would be enough if things continue on this path to extend into a line of credit for a large venture. Okay. Not that I foresee doing it. I wouldn't do it anyway, but I'm just saying in the process of communication and discussion, I'm trying to paint this picture for you because this is dire straits for the global economy. Like, we really, really have a major hurdle to get over. And I don't think that we are halfway through it yet. Does it mean that the stock market's going to go lower? I personally believe it will. I'm looking for 1,500 on the Dow. That's my realistic objective. It can go lower than that. These circuit breakers that they implement, they are at 7%, 13%, and 20%. They were instituted as means to protect the stock market from having a complete washout in one session. And for the most part, I like the idea of it, but the idea doesn't remove. It just creates a speed bump for the inevitable. And we're going to see lower prices. If not, this week, in the coming months, we're going to go lower. There was a guy on CNBC today that was jawboning. If you heard him for the first time, like if you just stepped out of a cave for the first time and you turned the TV on and he was talking and saw the averages on the screen like it was showing, you would swear that it was the end of the world. Like, this guy was talking like crazy, like nonstop doom and gloom, and it's this and it's that, and everything. And I'm looking at my wife and he was talking because she was making her lunch, and I said, man, can you imagine what people are thinking right now? Like, right now, what are they thinking listening to this guy? And all of a sudden, within 40 minutes or so, it had dropped down. They had to hit another circuit breaker, and then we bounced a little bit off of that. What we do from the lows that we created today on the S&P 500, we've taken out a old low from 2016, and it's normal to see it bounce up a little bit in here, but I don't think that it's something that we should be believing or having any faith in as a low that we're going to start to go higher. Because let's face it, there is absolutely no reason for people to go into the stock market and say, I trust this is time to go in there and buy, because there is no vaccine. We're a year away from that. And that, to me, is the only answer, quote unquote, that the stock market's going to accept. A working, viable vaccine. But now you have the problem of who's getting it. Because I've already stated I'm not taking it. And I'm not allowing my children. And I don't care what they say. I don't need to put them in their public schools. Not everybody has that means, but that's where I stand with it. And if you are one of the few that sent me anti-vaxxer debate emails, you can just stop, because I don't want to hear about it. Okay, I have a child with a learning disability, and they gave him something when he was being born, and immediately his blood pressure dropped really quick, and he is a special ed student, as someone that needs more attention in school. He's not impeded to the degree where you would look at him as challenged. He just can't retain things. He can't comprehend a lot of things. So I'm not going to put more chemicals in him, because we had paid and researched what they gave him, and it's alarming to find out what that stuff is in there. So if we get to that point where they find a vaccine, okay, they're going to try to push it globally. Every country's locking down. Every country is panicked Every country is wondering the same thing. How long is this going to go on, and who's going to infect me? Who's going to give it to me? Am I going to get it? Am I going to pass away from this? Is my loved ones going to pass away from this? This is that new threat. Okay, that risk that like 9/11 had. We used to have the color symbols. I talked about this last fall. I said, remember we had that? Look on Twitter. It's all there. And in September, I got this unction. I got this feeling. Okay, something, heaviness was pushing on me. And I felt we were going to have something bad. And I started talking about it. Then in October, I said, look, something's not right. Something is looming, and I just can't put my finger on it. But in my conversations with you all, you've heard me say these things before. They needed something much more terrifying than planes going into a building and buildings falling down, or an airplane falling in the fields of Pennsylvania, or a missile being shot into the Pentagon and calling it an airplane, and there's no footage of an airplane hitting it. No wing damage, none of that. So they need those things to stimulate and promote fear, because fear can be managed. Big Brother is always there to protect. So if everybody is scared to their wits' end, and if those aren't right now fearful, in the coming months you will be. They're going to ratchet this thing up so much that you're going to want to take whatever vaccine they have. And I'm not. I'm not taking the mark. If you want to know what that is, I'll create a thread in the forum. It's going to be a kind of like a potpourri area, things that I want to talk about that's non-related to markets. And they're probably going to offend a lot of you. And if you're of different cultures and religions, I'm not religious. I believe in God. I have a relationship with Him, but I'm not religious. And I'm going to give you periodically my opinion about certain things. And where possible, I'll provide you sources of why I believe what I'm saying in that area. That won't happen until next week. There's things I have to take care of this week that's going to take my attention away. But I want to talk about those types of things because I feel like I need to. And you don't have to go into those areas in a forum. Okay? And they're not there for you to go in and post and try to debate with me, because that's going to be a distraction. It's there for you to look at. If you don't agree with it, don't go into it again. Don't look at it, don't read it. Okay, but this is going to be a global push. Everyone's going to have to get it. Everyone's mandated. And you're not going to have your kids in schools, because if they don't have the shot, they can't get in. You can't get your driver's license unless you're vaccinated. No man could buy or sell. This is that beast system. It's just the beginning of how it rolls out. It takes the entire world to be an upheaval, economic collapse. How many things does it have to take to get everybody to basically subscribe to the view that we need an answer? We need a solution. And it's going to come in the form of a syringe. And I don't see it like that. And I'm not saying that you should or shouldn't. I'm just going to circumvent all the questions that I'm already getting and then what I'm going to be getting in the future, because that's where this is leading. Okay? It's a global vaccination, and I'm not taking it. Period. So, back to the discussion about the markets, and I'll put my tinfoil hat aside for a little while. We have ran through the SIBI here, and the SIBI here, all of this price action movement in here. Didn't come back down in here. I mentioned that it would be better if it didn't come into that. It didn't. We found support here at the top of the fair value gap here, rally through, aggressive run through after the initial run to it here, consequent encroachment, retraced, went through a little bit, and then vaulted through. Buy sell liquidity here, it runs through it almost to 102 today. Now, do we have to chop and bang around in here or come back maybe even to this old high? Because what is this? Low, high, lower low, breaker. So we want to see, does 100 or just a little bit below 100? It's better if it doesn't, but if it finds some support in here and rebalances to this old high, that would be enough for me to expect a run to 102 and then maybe expand up above that 104. If we collapse and we go below this SIBI that's been rebalanced here, if we go through that and go lower, I have no opinion and I don't know what to expect. Okay, so it's very clear. That puts me on the sidelines and I have zero idea and I'll be waiting for more information. Clear one-sidedness. What am I saying in this commentary? I want to see this high on this candle right here. Okay, the high at 99.83. I don't want to see it go below 99.83. I want to see $1 be supported right here. If we can come down to that and find some support, I would be looking for it to rally to 102, then expand to 103 and 104 and just a bit above that. Many years ago, I mentioned in my live sessions I was doing on YouTube, I was looking for 102, 104, 105, and as much as 107 back then, long term. We could see those types of levels if this continues and the dollar becomes a safe haven again. Well, not again, but in continuation of what we've been seeing here since the lows in March. I believe that this will ultimately lead to some exchange on the war front. Trump continuously calls it the Chinese virus, and I think that is to instigate and promote this sense of hostility. And there's, well, Russia, China, and Iran are actively promoting, as I mentioned before, that the U.S. released this in their country. Did they? Didn't they? I don't know. It got released. And now it's who did it, and ultimately it's 3 against 1. War is going to be the end result of this, regardless of the vaccine coming before or after. And it's going to be ugly. And that's going to be more problems for the marketplace. So you're going to have to be very, very nimble in trade when you can with very, very little leverage. This is not get rich fast. This is not casino time. This is absolutely dangerous, treacherous waters. It's very interesting to see my concepts still holding up in this environment. I am, just as well as you are, amazed at what we see. Given that alone, it's not an invitation for me to get in there and trade like I've done in the past. I'm respecting the level of risk because I believe we are entering a period where the market's going to get really stupid. It's going to be untradeable. You're going to see moves that are just going to be unbelievably wild. Like you're going to see both ends of the spectrum. You're going to see wild runs higher, wild runs lower, major slips in liquidity where they do major repricing, and it's going to hurt you. This is the conditions that create black swan events. We're going to see another swan. What is it? I don't know. Okay, I don't know. I just know that this isn't the end of it, and it's foolish to subscribe to the ideas that we are looking at the worst behind us. Come on, man. It's ridiculous. Like, we just started testing in the U.S. There's a lot of states out there that people are just roaming all around. They were flying all around our country. These young people are getting ready to get out in college, spring break, that type of thing promotes these events where they party. And you know what it was like when you were younger. You felt invincible. I know I did. And you're going to take the chance. It's an old person's virus. And the beaches and the places that they carouse and meet up at, they're going to be exchanging, if they are infected, this virus. And it's going to promote more and more and more of that. So what's going to happen is that folks are going to get fed up with this idea of being held in their home. Now, truth be told, most of my days I am living an introverted life. I'm doing things in the seclusion of my own home. I gotta admit, this past week, I'm getting a little stir crazy, and I had to go out and take a ride in one of my vehicles just to unwind, just remind myself that, I'm not in prison. Where normally I could be in my home for several days without ever stepping foot outside. That type of tension is going to build on people that don't have an introverted lifestyle. If you're extroverted, you're used to being out there, social butterfly. These days, these weeks, these months that are coming, where you have to be in your home, shelter in place, you got to do those types of things. It's going to wear on you. And those with substance abuse and are victims of that are going to just do whatever they want to do. There's a guy that was 53 years old and infected with it, and he refused to stay in his house. And they literally put a armed officer guarding him in his home. The easiest thing would have been lock him up and put him in isolation. That's what they should have did. So I believe they're doing that to get people more or less pissed off at people that have it. So that way, when they start cracking people's skulls in the streets, you're going to be like, yeah, they deserved that. So what they're doing is they're conditioning, they're priming people to get infuriated. Yeah, he should have did this, he should have did that. He asked for that. They're still human. They're still just like you and I. They're just not able to conform. They're not able to see the big picture. They're in denial. And there's a lot of denialists out there, and they don't care. Some of them are spiteful, and they're going to want to spread it because that's just their evil nature. Other people just think it ain't real. It's a cold, and so what if other people get it? They'll get over it. It's not a big deal. Either way, it's not a good thing. And we don't have enough National Guard in the United States to keep people, every single person, in their home. They're not going to do it if they don't want to do it. And this is going to roll into what the military in the United States were doing drills for. And the drills, they did names and classifications that were more or less like code words, but like the zombie apocalypse. We all know that there isn't going to be zombies walking around eating people's brains and stuff. Come on, that's not happening. But they used the term zombie as a code word for a person that was under civil, disobedience. They were doing whatever they wanted to do, and they were outside of the herd that they're pushing all of us into. Stay in your homes, shelter in place, do what you're told, and contain this growth of this virus. That type of stuff's going to lead to more violence, and that violence is going to create even more instability. While you don't see a lot of it in other countries, I think the United States is going to really show its ugly side. And you're going to see a lot of these people just acting out and being, crazy. And they're going to start hurting them. And the idea is for the general public to say, yeah, that level of violence used against them is warranted. We're already hearing the terms I told you was going to happen, shelter in place. The Bay Area in California, San Francisco, certain portions of New York. It's going to be in every state in the United States. And they're not going to keep everybody indoors as much as they're leading people to believe it's going to happen. It isn't. Okay, so we have a lot to get through, and that's going to bring a lot of volatility in the marketplace, a lot of uncertainty. It's going to bring a lot of fear-based trading, and certainly a large degree of unwillingness to get in and buy stocks. So that's my monologue. Okay, so long story short, as long as the dollar's going up, gold isn't going to go up. That's where we're at. Now, if the dollar, for whatever reason, turns around and crashes and just turns in beelines for 94s, then gold is going to go through the roof. And again, in that condition, I wouldn't be surprised if it goes to 3,000 this year. But it has, right now, a great deal of difficulty because of the bullishness in the dollar index. All right, so let's drop down finally into the 1 hour chart. You can see the fair value gaps in here really offering a lot of support to institutional order flow. Order block coming down. Look at the reaction right at the top of that fair value gap. That's from the daily chart. Support rallies through. Right in here, you have your BISI. Institutional entry drill. The low on that candle, 99.16. All it needs to trade is the 99.16. You can be a buyer again. 99.15. And then, boop, takes off. Fair value gap in here. Trades the consequent encroachment. There, or just a little bit above it. And rallies and extends. I thought for sure we were going to see 102 print today on the dollar index. Just fell short of it by a little bit. All right, so let's drop into a 15-minute time frame. I've already gave you all my ideas about what I think is going to happen for the dollar index, or what I'd be looking for. Let's say it that way. We're in an area of fair value gap now. Here, so does it want to start to vault and make a reach into 102 tonight, going into midnight or just about in Asia? That'll be interesting to see that. I don't want to fade anything on the dollar index in here. I just think that it's got a lot of things going for it, and you don't want to stand in front of it because you saw a big movement today. This is a lot of movement for the dollar in one day. It can do more than that. You know, there's a lot of stimulus being pumped in to the economy in the U.S., and you just don't want to stand in front of the Fed. And if they are really warring against Russia and Saudi Arabia in regards to the oil price, they're going to flex back with the dollar index price being really sent higher. And it could be a stunning move, which would really push all the other foreign currencies lower. All right, so let's go out to the daily, and we'll roll into euro dollar. Okay, so here's euro, and let me pull this out a little bit, clean this chart up. So we have our old fair value gap on the weekly, and you can see that is here. Let me squish this so that you can see it. That one single candle right there, it shows on the daily. It's also on the weekly, where it was only off by like 2 pipettes or so. Ran up, relative equal highs here. Wipe those out. We ran for that, so this could potentially break down. Think about what I gave you in terms of the commentary last week and last Wednesday, or last weekend and last Wednesday. We were looking for this fair value gap, and then this fair value gap, and then eventually this one here, and everything broke down, and we have sell side liquidity resting here. Came right to consequent encroachment here, and then traded back off of that. We're back inside of fair value, which is this one single candle passing up here. This candle there is high as 1.0908 and 8 pipettes. That's right here. We're extending it out in time. So we want to see price not really trying to make too much of an attempt to get out of that. We want to see it just reprice to this and then maybe continue lower, especially if we see a bullish dollar, and attack the sell side liquidity here. I don't think we're coming back down here just to go higher. They're going to want to take the liquidity out here if it's going to go higher and the dollar fails to go higher, they're going to want to clean that up. But personally, I think we're going to go down to the high 105s to 106s on euro dollar. And again, the idea of parity has now been brought back onto the table between euro and dollar. Let's drop into an hourly chart. All right, so you can see, look at the reaction here on this fair value gap. Again, look at the daily chart, go back and rewind it for a second, you'll see what this is. And then look at the reaction, boom, boom, hits it and then rolls through. Now, here is the failure of support and resistance. This is why I hate the idea of it, and it cost me lots and lots of money. I lost fortunes of real money trading support and resistance because it's myopic. Okay, here it went down and bounced. Here it went down and bounced. So draw that out in time. Okay, you can just use my line here. Draw that out in time. If it ever trades back to that level, I could be a seller. Well, it didn't do it. What is it doing? What I teach you. Here is your big candle for displacement on the downside. So you have the low to this candle's high here. You have one single pass through on that range. So all you need to do is see this candle's high, which is 1.1039. So 110.39. Well, it trades to a high of 110.45. So it went 6 pips above here. That's your institutional entry drill. So you can take an entry right there. And in price reprices, goes down to consequent encroachment. You see a little E, the CE here. Right to it here, and then bounces back up into fair value. Beautiful price delivery on euro, working with that daily market maker sell model. And you can see the price delivery here. Again, failing to get up to that old equal low that would be broken support, now turn resistance. It wasn't having any of that. Bearish order block, trades up into it here. Displacement. Fair value gap. This candle's high, 109.88. All it needs to do is trade to that price. You can be a seller for continuation lower. It runs into it here. Institutional entry drill. Okay, or institutional order flow entry drill. Okay, you'll see that in the lessons where I talk about how that, if you want to look for prices to enter on when you're practicing with your demo or paper trading, that's what I'm referring to. Now, that could eventually be your entry pattern for your trading model. It's just something I teach everybody at all levels when they come in. That way you know it ain't just me pointing, okay, the market's going to go up here or it's going to go down here, and then I say, look how smart I am. That's not what this is. What I'm telling you is this is where it's heading. So if you want to practice and you haven't gotten that far into the mentorship content or to the charter level where we talk about actual trading plans and price action models, at least you have now a specific entry technique that puts you in line with the institutional order flow and reaching for the objectives I give you for the weekly commentaries on Wednesday and on the weekends. Fair value gap in here, comes down, hits that beautiful, beautiful, beautiful run. Hits it, boom, pops, another fair value gap in here, hits it, boom, runs right back into fair value. Okay, so we have a bit of a market maker buy model in here. Consolidation, we break down, distribution, redistribution, smart money reversal, low risk buy, reaccumulation. We might reaccumulate in here, and again, that would promote the idea for the dollar trading down to that level I outlined on its daily chart. Okay, so around that 100 level to 99.84, I think it was, or thereabouts. And that would allow this to run up. Okay, it doesn't need to clear this. It could just bump the bottom of it. Okay, and maybe expand outside the fair value gap with a wick, and then maybe continuation on the lower end after that, somewhat of a retracement. If we trade above these equal highs, then we're going to come back up into those old equal lows that would be a return for support, broken term resistance. But I don't think it's going to be a sell if it gets there. I think it will likely see dollar go lower, and then euro will kind of come up a little bit more than just this level here. All right, let's go to cable. Again, market maker, sell model. Look at all the levels in here. Drop down to a 4 hour, a 1 hour, and you'll see all the levels from the buy side of the curve line up with all the sell side of the curve on the down portion of the sell side model. This market maker sell model. A little bit of a tongue twister there, Michael. All right, so cable. All right, so here is the British pound versus the US dollar. So we were consolidating in here. We were unable to get above that high. If you look at the relationship between the dollar index, this high and this high here, the cable was unable to make a higher high when the dollar was able to make a lower low. And there's your SMT divergence, and that was the reason why I said we're going to make an attempt to run lower. I felt very confident about going down to here. I did make a remark about I wasn't looking at this this low here initially as a run for sell side liquidity. I said that we could possibly get in here, fill in this gap and the order block, and you might get a little bit of a bounce in there. We didn't really get a lot of a bounce, just paused in here, and then obviously all the cases in the UK started to be larger for the coronavirus, and it finally broke down. Here is another area over here. I'll scrunch this up so you can see it. Right here, this BISI and bullish order block. We ended up coming back up into, notice this candle's high. Okay, so yesterday's high, we trade up into this gap. All right, so we break through it, then we come back up into it. Watch this price action in here. All right, so here's the hourly chart on British pound versus the dollar or cable. You can see how price traded right up into that old fair value gap and runs lower. So as I mentioned back in here, okay, go back and look at the recordings on this date here. I said that we're probably going to be very heavy, and it's going to have an unwillingness to want to rally. Okay, so it's just going to just roll over. And we've seen that. This high here wasn't even broken by this run here. Went lower. This high couldn't get near it. In here, just everything is a lower high, a lower high, a lower high. In here we have the high retracement. It just gets inside of the fair value gap, picks up more liquidity, runs a very short term liquidity pool here, and then displacement. 15-minute time frame. Just unwilling to make any attempt to rally. Just extremely heavy, and price has seen just lower prices as a result. Not a lot to say about this one except for it's just finally giving up the ghost against this pandemic. All right, and let's go over to crude oil. April contract. Okay, so J is the month code for April, and TradingView kind of gives you a real good description of the market delivery. Month is April 2020. You click on that. You can see price comes down just like 4 points away, or 6 points in this case, 6 points away from the 20 level we were looking for. So I called 20. I called 26. I called we would run below 42, and then it collapsed. I talked about how this area here, they used the headlines to put the top in when they were saying the drone strike. You know, all of the idea of, you know, it's going to create a war, all the oil is going to go up, 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 up. They used all of that narrative to run the equal highs out, and then we've seen nothing but lower pressure on crude oil. This movement lower on the part of oil is what's causing the dollar index to go higher. Again, it's that tit for tat. You know, you do this, well, I'll do that. That's what the Fed's doing in response to them between Russia and Saudi Arabia, keeping the U.S. from getting into the oil industry. So that's why oil's gone to where you've seen it today. So just literally points away from 20. So it's had its fair share of repricing lower. And if we get below 20, I think it can potentially reach to 15 next. And then if it really just extremely falls hard, $12 and $10 a barrel. Those are extremely, in my opinion, unlikely, but still possible. Okay, so I'm giving you my really, really far low end objectives: $10 a barrel, $12 a barrel. Reasonably, I think it's going to trade to 15 to put people like out of their minds in terms of how cheap it is. For a short period of time, I think that the folks in the U.S. are going to enjoy very, very inexpensive gasoline. But like in all crisis scenarios and such, they're going to do runs on gasoline next. I told you about the toilet paper. Okay, there is no shortage of toilet paper. It's just they can only have so many rolls of it in stores. But because people want these creature comforts, okay, that's the reason why I told you to buy it. It wasn't because I expected toilet paper to be a non-existent commodity. It's that I know human nature, and they're going to want to be. They want to feel comfortable. Let's be honest. Everyone does their own business, and you need to be able to clean yourself up. And we all like to have that feeling of being human, and that toilet paper basically allows us to have that feeling of being human. Otherwise, we'd be in the bush with a leaf. So if push comes to shove, that's what you would be doing. And let's be honest, and it doesn't seem fun, but we all can still take care of ourselves that way. I told you that they would clean the stores out. They've done that, and not just in the United States. Okay, I'm telling you, the next things that you're going to see them do is they're going to start pulling money out of their bank accounts, and they're going to start putting limitations on how much you can take out of the bank. And they're also going to make runs on the gasoline. Everybody's going to start filling their gas tank up, because the next thing is they're going to be fearful of, what if I can't get gas? And whether that is a real fear or concern or not, I don't know. Because if we're told to shelter in place, where are we going to drive to? They're not going to let us drive anywhere. But it's just, people are going to panic, and they're going to be doing irrational things. So I tell my family members all the time, right now, don't let your gas tank go below a half. It's peace of mind. It's something that you may not even need, but at least it gives you something less to worry about. All right. So that's what we saw here on oil. And the last bit of business here, I told you to watch the list of currencies I gave you for the interbank inequality study, showing how we can pick out the largest price moves in the forex. You can look at the euro Aussie dollar. That was the leader pair for the strongest upside. I'm not cherry picking. I'm not using this one because it just so happens to pan out. I gave you all the details as to why this particular pair was the absolute strongest one. And there you go. Almost 3,000 pips. Now think about that. Nearly 3,000 pips. Complete leader beyond all comparison, using the individual currencies and using relative strength analysis, as I was outlining in the lesson. We've been covering this the entire month. Look how much upside strength is in this pair. Now, there's people posting charts and drawing people's attention to it now after, but they don't really understand the mechanics of what caused this particular pair to go up. And they'll have another group of other currency charts that they're pointing to. But this one here, you know now what made this one the strongest. I taught you that this month. Whenever there is a large intermediate price move, okay, whenever there's a move that's going to occur on the daily chart, in the dollar index. And it creates a one-sidedness in the marketplace where the dollar's going to go up or the dollar's going to go down. Whatever that is, you want to be looking for the relative strength between strong currencies and weak currencies, and then coupling weak currencies with strong currencies based on the name of the Forex pair. Euro, we arrived at, it was the absolute strongest of all the currencies at the time when the dollar made its high. Australian dollar was the weakest. Okay. What is this pair reaching up for? I gave you the mechanics of why this pair is bullish and why it should lead to the upside, and it certainly has done that. Let's look at a monthly chart. What's it doing? Filling in the monthly SIBI. See that? So it has a little bit more room to go on the upside. If it goes above this, then we're going to probably make another higher high. And that's a lot of price movement. And again, that would also require other things that I mentioned earlier in the video unfolding. But for now, all they're doing is rebalancing this sell side imbalance, buy side inefficiency. So this entire 1 month range of only seeing one single candle pass between the previous candle's low and the previous candle's high, that range is what you're seeing them quickly run up in through. It's already above consequent encroachment, the midpoint. So we want to see if it can reach up into the low of this month, and it's 1.9034. So basically 1.935. Okay, 1.9035. Yeah. So that's the business there. If you look at it on a weekly chart and draw this out a little bit, it doesn't seem so apparent, does it? Let me zoom in here, right in that little area. So this is why you do a top-down analysis, and you can see in these little areas that would otherwise look balanced because you have this one single little candle here, fair value gap. See that right here? Let me zoom in just a little bit more. So you have that one individual SIBI, sell side imbalance, buy side inefficiency. This candle's low, this candle's high. We trade up, fill it in right there, and then it trades lower. Volume imbalance, we trade up into the volume imbalance here, it sells off. Fair value gap, fills it, sells off. Volume imbalance, fills it, sells off. Fair value gap, bullish candles right for the big move. That's your bearish order block. Trades up to that, and sells off. In here, it doesn't look like it's inefficiently traded. It's inefficiently delivered in the scope of a monthly chart. So in this area here, look at the difference between this and then looking at it in this view of a monthly candle. See? So that's the reason why I teach you in the mentorship. When you get into the later lessons, you'll see the progression from that monthly chart to the weekly chart, to the daily chart, to the 4 hour, to the 1 hour, to the 15, the 5, and whatever else you want to look at, less than a 5 minute chart. You use the context that's provided to you with the highest time frame, and then you'll see where price is being drawn to from the institutional perspective, because that institutional liquidity is going to be offered to the large funds. This is the areas that they're going to allow it to be repriced to. But beyond this, there really is no narrative that needs to be traded to except for above these highs or the rejection block here on this candle's close at 2.01 and 1. So that's the business there. I gave you a lot to talk, I gave you a lot of talking points rather, and maybe I bored you. Maybe, I gave you more reasons to be upset or worried. It's not my intention to do that, folks. I'm just trying to do my best to condition you so that way when you start seeing these things, they won't shock you and scare you into panic. This way you're expecting it. Thus far, we've seen pretty much everything I've been pointing to next, and it's happening. So, and again, I'm not beating my chest. I'm not trying to say I'm Nostradamus. I'm not a prophet. I don't have ESP. It's not that I'm a brilliant genius or anything like that. I'm just reading the tea leaves, okay? And this is my first time in this environment, just like you. All I'm doing is trusting what I believe in and what I understand about the markets and how human nature repeats itself. It's going to be rough. It's going to be uncomfortable. And they're going to ask us to do things that you're not going to probably want to do. But what alternative do you have? Take care of your own. Hunker down. This too shall pass. Until I talk to you next time, I wish you good luck and good trading.